morning, good afternoon. Hope you're all doing great. Hey Ayakame, nice and early. How are you doing? Good morning. Hey Jimmy. Hey Jumarinas, good morning. Give it a couple of minutes before we get started. I think everything is working okay, working fine. Hey Stefan, how are you doing? We just had the UK CPI release at 3.2%. Pound dollar pushing up slightly, waiting, well, not slightly, pushing up quite a bit, waiting for it to complete, hopefully complete its retrace and turn back down, maybe. We'll talk about that shortly. Good morning, Angel Case, how are you doing? Alright, so if you are new to the session, please leave a message, say hi, let me know where you're joining us from, and for all the regulars, a big welcome back. Do again drop a message and say hi for all the regulars watching. I know there are many people watching and not commenting or not saying anything. So if you have any questions at any point in time, please feel free. Remember to put it into the chat and let me know. And you can help me out massively by clicking on that like and subscribe button. Let's hope that the algorithm picks it up and we'll get more people onto these live streams and whatever videos I do. Okay. Good morning, Stanford. How are you doing? Hey, Linley. Good to see you again. All right. Today is the 17th of April. It is Wednesday. It feels like Tuesday, but it is Wednesday. Quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, so please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. All right, get rid of that. Here we are now. Right? Let me see. Hasn't been very exciting in the markets for today, so you'll probably notice that I'm not super charged up as well. It's been a bit quiet. Haven't done too much. Just want to remind you guys again of that if you haven't already, the link for the let's do that. The link for the Tickmail webinar is there for you guys. You can see that today, 17th of April at 8 p.m. GMT plus 8, I will be doing a webinar about trading the news, the unseen opportunities. So if you just go to follow that link, go there. If you're not a client, register. If you're a client, go existing client, put in email address and trading account number. Register for the webinar. I look forward to seeing you guys on the session together with me in about 5 hours time. You might get sick of hearing my voice, but I've just rejigged up the content or the educational material for the session later. I can tell you that it should be, you've definitely learned something. It should be good. All right, so I hope to see you guys on the session. Make sure you do that. And now, so since the last time, hi Amthol, how are you doing? So since the last time we spoke, what has happened at 8:30 p.m. last night, GMT plus 8, we had the Canadian CPI number dropping quite a bit. It was CPI month to month was 0.3, expected at 0.7, came out at 0.6. Month to month is fine. I'm more concerned about the median and the trimmed CPI. Hang on, it's a bit small. Okay, the median and trimmed CPI year on year. So it was at 3.1, got revised downwards to 3. Expected 3, came out at 2.8. Trimmed CPI was a 3.2. Expected to stay at 3.2, came in at 3.1. Right? So inflation growth in Canada is slowing down. Inflation growth in Canada is slowing down, which is a relatively good news for the Canadians, especially for the Bank of Canada, as the CPI approaches or gets within its 2 to 3% target level. So that again brings back the not so much a speculation, right? But brings back the idea that the Bank of Canada, the BOC, could start looking more seriously. I'm sure they were serious in the first place, but look a bit more seriously towards establishing a timeline for their rate cut decision. Okay, so with that news, as we start thinking about a possible rate cut decision from the BOC, we saw on the CAD that was at the news there at 8:30, right? We saw that at 7 and at 8 where it pushed up. So exactly as we had planned, right? We looked for it. Yesterday we were talking about it to come down to test that 1.37777 support level, many sevens there. Test and bounce up towards the interim level, and it's worked perfectly. There was a good 50 pips if you managed to catch that trade, right? So this push up here on the US CAD was because of that potential rate cut decision to come back into play, leading to weakness in the Canadian dollar, leading to the US CAD pushing to the upside towards that 1.3840 level. You can see right across that previous swing high, which we saw in November last year. So it came back to that point. So back in again. It came back to that point and then hesitated and pushed back down again. So this was exactly as we had planned, as it bounced off the support towards the interim level. If you did catch this move on the US CAD, do put it into the chat and let me know. That was primarily driven by the CPI number that was released, and also a little bit, but not too much, due to the zoom in a little bit there. Okay, due to the slight recovery in strength on the dollar index. See, yesterday we were talking about the dollar index to consolidate along this 106.30 level. It did that, and then we said it could retrace down to 106.10. It came as low as 106.08, and then to rebound up to test 106.55. It rebounded up to about 106.51, and then retraced back down again, now consolidating slightly lower compared to where we were yesterday at about that point, 106.36. Right now, the dollar index is at 106.21. Okay, so that was the news. That was the news from yesterday. Didn't pay too much attention to Chair Powell, Governor McCallum, Governor Bailey from the BOE, BOC, and the FOMC speaking last night. Did not expect it to move prices too much, but there were comments of headliners, especially from Chair Powell, where he said that Chair Powell signals a delay in rate cuts due to persistent inflation, right? Delay in rate cuts. If you look at this now, the CME Fed Watch 2, let's see whether it's affected the numbers by a lot. Well, May we know, on the 1st of May, we know it's pretty much confirmed that you're going to stay at the current level. June 12th, right, it was, well, 1 week ago it was 80 something, 83.5 to stay at the current level. 1 day ago it dropped to 78.7. Now it's back to almost the 85% level. Again, possibly because Chair Powell said there's going to be a delay. There's likely to be a delay because of persistent inflation. So we're looking at it back to that 80 something, 85% likelihood for rates to stay at its current level. Through to July, where we're looking at a 56% chance of a no change and a 43.2% chance of a rate cut. Right? So July is a long time away. July is a long, in trading terms, it's a long time away. Things can change depending on the inflation numbers or CPI numbers, the core PCE price index that comes in. This could change as well. But it is really coming to the point where we definitely want to see the Fed take on some action. They were initially rumored or anticipated to cut rates 3 times. Now it looks like it's down to 2, right? Possibly down to 2, but also that maybe even if they do 2 times, there might be one test case, a small 25 basis point rate cut, and then maybe a bigger one on the second round. So even if it's 2, it might be one small, one big. We never know, right? But for now, all we are focused on is that on the 1st of May, pretty much confirmed that they're going to keep rates on hold. And in June, it seems like a more likely scenario as we progress towards that timeline that the Fed Reserve will keep rates on hold as well. Following on from that, we had 6:45 a.m., way too early for me. The Kiwi with their CPI number, it was 0.5, expected 0.6, came out at a 0.6. With that news, you see that at 6:45, we saw the Kiwi push down slightly and then push back up because inflation, CPI, inflation growth quarter on quarter, climbing slightly from 0.5 to 0.6 is not a major factor, but it's going to signal that maybe this could lead to a year-on-year number that might not give the RBNZ that much confidence to cut rates too quickly. Similar to what Fed Chair Powell is saying for the US. Persistent inflation could delay the rate cut decision. And then through to just 1 hour before our session here, we had the UK with their CPI year-on-year was 3.4, expected 3.1, came out at a 3.2. Again, it's the same story, it's the same similar numbers where we're seeing inflation slow down, but not as much as expected at 3.2. That led to the pound dollar finding a little bit of a support here and pushing to the upside. Following this news decision or this news release, we did see the pound dollar bounce up almost 60 pips, 56.6 pips to the upside. Okay, so that was what has happened. I'll do that to show you. All right, that's the support area that we have, like that. All right, so they found a little bit of support and has bounced up to that 23.6 retracement level that is now testing. There we go. So that's what has happened since the last time we spoke. What's coming up for the rest of the day? Not a lot. We do have the euro with their CPI, their final CPI year on year, 2.4, expected 2.4, not expecting a surprise here. It always, pretty much always comes out as expected, as previous, together with the core CPI, always likely to be quite accurate. So I don't think we're going to see a big surprise. With that, I do feel that today, like I was saying at the start, could be a little bit of a quiet session as we set up towards Thursday with a bit more news, and then on to Friday with the retail sales number for the UK. Not rushing to any trades for today. I think that it could be, or it looks like it could be, a bit of a retracement day. So just gonna sit out and look for good setups. If you have any good setups, do remember to share them. Either share them in the chat right now, we can have a look at it, or share them in the Discord channel. If you have joined us on Discord, we can have a look at your trade setups on Discord as well. Okay? Alrighty, let me see. Good. Alright, okay. So now, with all that said, looking at the charts, take that big green line away. Someone asked, why do I have a big green line there? We thought that if it broke above that, it could go further. Did not break, so we take that away. That scribble was more accurate, but we'll still take that away. Now, we're seeing the dollar consolidate. Okay, I'll zoom out a little bit just to show you. We're seeing the dollar since the 10th of April, which was a week ago, right? Wednesday last week, it shot up, pushed up, consolidated slightly, pushed up again on Friday, consolidated, pushed up again on Monday, now having a bit of a wide consolidation. Initially, we were in the office here, we were talking between the traders, were thinking, okay, if it breaks below, it looks like it's consolidating, it could have a more significant retrace back down. For that to happen, what the dollar index needs to do first is to break, I'll clear that out, is to break below that 106 support level, which is also formed by the 23.6 retracement level, which we have right there. Okay, so most likely what I anticipate, like that, okay, today being the 17th of April, dollar index is going to be in this wide consolidation between 106.10 and 106.40, 106.50. Okay, so it's going to consolidate between 106.10 and 106.50. That's first thing we're going to look for. We're looking towards. If it does break, I don't see any big reason why it should break higher or lower. Right? I don't see any big reason why it should break higher or lower. But so that's why I think that it's most likely to consolidate in this range. But if you look at that trend to the upside, we're naturally thinking that, even if I caught that, yeah, even we're most likely looking for it to break above and push up. I would say that above, needs to stay above 106 to remain bullish. Above 106.60 could test 107. There we go. Okay, so it needs to stay above this level to remain bullish, and if it stays in consolidation and it breaks up above 106.60, we could see it get up to 107. I'm happy with that. Good. I'm actually just thinking, could it retrace down? No, I'll be happy with that. I'll keep that, just thinking of that small trend line as well. Okay, so looking for that to continue pushing up slow. I anticipate slow, but dollar strength still in play. Then looking at the Kiwi, that did not happen, take that away. This is getting to the point, so let me just revise that. Right, we're seeing that 50, I don't need that. Let's take that away for now. We're seeing it push up towards that 23.6 level and rejecting. So expecting dollar strength, but slow dollar strength come back into play. Bit of a consolidation. I think that it's going to stay within this range. Might not be worth trying to sell it down from here. There's only a 30-something pip move to the downside. Just thinking, give me a second. All right. I don't think it'd be worth doing selling from this point. And where is 38.2? It's up here. What I'm thinking is that it could sit there, push down a little bit, and then push back up. So I would still want to see a test and reject of this resistance level, which would give us a entry at about 5930, 60 pip to 30. So we're still looking for that move back down. Yeah, I think it's going to slowly grind to the upside, reject, and push back down. So 5930, 30 to 60 to the downside for the Kiwi. 0.5930, stop loss 30, take profit 60 to the downside. Then, good morning Pips Apprentice, how are you doing? In a second. Now, let me see. Aussie dollar, we saw, we don't need that, we can take that away. It pushed down slightly. That did not trigger, take that away for now. I still see that. I'm actually thinking here that because we've seen that bounce off this point, I'm thinking of the a slightly more speculative position that we could see the Aussie push up. I don't think it's a high chance. I think we drew that the last time around. I don't think it's a high chance. But just thinking, could it push up? No, I don't see that happening. I'm thinking that it's going to consolidate, push ups, very similar to the Kiwi, push up and then turn back down like that. Then I would look to short 6430, 30 to 70 to the downside with a bit of a hesitation at 6395. About there. It looks like it could push down a little bit, but I think we're still a bit in the early stage where it's in that consolidation. Checking, I don't think anything wrong with Bollinger there. No, not doing too much. Yeah, I think it's gonna consolidate. I'm actually looking at the technical view, quite tempted to think that it could retrace down to 50, but I don't see any big reason why it should push down. All right, so there is that nagging feeling that we could see it trade down to 50. I think that that's a more likely scenario. So I think that still back to the idea, it's going to consolidate along here and then slowly push up towards that level. But some things telling me that we could see that break. Okay, I'll keep that view. 6430 30 to 70 with a hesitation at 6395. 6430 20 to 70. You can even do 20. 20 is a bit tight. I think that's fair. A test and reject. Hesitation at 6395. Hesitation at 0.6395. There we go. Hey Jamil. Then on to the yen. Right. Anyone caught that move? That very quick. I did not catch that move. All right, I did not catch that move. I thought that I was going to stay in there a little bit longer. I thought that it would be something today. It wouldn't have got to my take profit. It came down. So what we saw last night at 9 p.m. GMT plus 8, it broke out of the trend line, shot down below, just below 154, and then went straight back up, right outside of Bollinger, and it came right back in. Okay, so this is the US yen still. Take that away for now because we're looking at that level. Wait, we're looking at that level for intervention. Not seeing intervention now. Take that away. It's, and we don't need this triangle. It's consolidating. I don't even need that anymore. And this wants to go all the way up here. So it's consolidating at this point, pushing up. I wouldn't trade the US yen to the upside. Right? I wouldn't trade the US yen to the upside. I'm going to be a little bit more, even more cautious. Right, even more because of that spike down. I'm starting to think that only if it breaks below this area, then we're going to see a big sustained move, a more sustained move to the downside. What looks like is likely to happen here on the US yen is a slow climb towards 155 and then maybe a rejection back down. What you could be looking at 154.80, stop loss 30 pips, take profit 90 to the downside. I don't even think that that's an easy move to happen. No. I mean, that would be a good speculative setup, but I think that it could, if we do have that speculative setup, what I actually feel that is more likely going to happen is that it could, why I deleted that, I think it could do that, come down, hit, and then go back up again, maybe, right? So I'm just going to be a bit more cautious on that. I would say that US yen, probably nothing to do on it right now. We're probably looking for a reaction at 155. Okay, so US yen, we wouldn't do anything. Wait, look for reaction along 155. It's not a big trading day today. Okay, and then on to the pound. Those of you who are on Discord, right after the news, I put in there and I said 3.2 got released at 3.2, waiting for it to climb and to sell it back down on the reversal. So this is not there, take that away. All right, so what we've seen here is the pound dollar on the news pushed up, tested the 23.6 retracement level from the long term, and then now pushing back down again. You could, if you're taking a little bit more risk, you could be, and I know a couple of you probably would have got into this trade already, is to sell down, right? From this point, for example, 30 pip stop loss, 40, 50 pip take profit to the downside. Looks like it's going to retrace down. Not an H1 kind of trade, it's probably more an M15 kind of trade where you see it push up, test. I'll put this line here. Test the 23.6 level, right? Reject, and then that's where I think many of you would be looking to sell on close of the candle. 20 pip stop down here to 45 pip take profit back down. Great trade on the M15 time frame. I know Jamil has probably done that. With that, then looking at it on the H1 time frame, it's probably a bit too, I wouldn't say it's too late, but not the most ideal place to get in right now. I think we could see what happens on the close of this. Just checking all the different time frames. Okay. It's too late. I wouldn't say it's a good place to enter now on the H1 time frame. I would say that if it pushes down lower, then I would be looking to sell down again from this point, 1.24. No, I don't like that either. Angel Case has been selling since 2478. 24. I knew it. You caught right at the top. 2478, right there. I think you got it on a 1 minute time frame, just as it pushed back down. I want to see this test a little bit again, or if it closes down past this point. Anywhere in between, I wouldn't do anything. Right? So I most likely will be looking for a inside bar push up again, and then look to sell down or to sell down from this point. I don't see a big trade here. I don't see an interesting trade set up here on the H1 time frame. You know what? I actually like it more. I would actually like this more if it breaks below a level. Huh, nice one, Angel Case. Very nice one. Yeah, Jamil was saying wait to close a candle. H1 time frame is break with momentum. Yeah, that's why I'm very undecided on this. You know, in the scheme of things, it's really just trading within this range. I like it more to sell down, right? And if I were to take a little bit more risk, then I would sell down at 1.24, take profit 125 to the downside, stop loss tight at 30. That's what I would prefer to do rather than try and catch something in the middle there. Right? Or even better, a bit safer would be 90 pips, 95 or 100 to the downside, 30 stop loss as it breaks the support level. I think I'll keep to that. 1.2365, 30 to 100 to the downside. All right, so take that away. Oops. Sell 1.2365. 1.2365. Stop loss 30, take profit 100. 1.2365. Stop loss 30, take profit 100. 25388. 253 is a right up there. Yeah, see, if that pushes down this way, then we have this trade. If we see this closing around here, I think that the next move will be higher. Then we'll look for a test of that to sell back down as it rejects that 30 and 50% retracement level there. Right, so it all comes down to what's going to happen on this candle. If this candle, okay, I'll tell you, try more specifically, is that if this candle ends up below that low, then we're going to see that happen. If it ends up below this point. If it stays anywhere inside, we're most likely going to see that push back up, and then we look for that rejection of the resistance to sell back down. That's why at this point, I'm super undecided on the pound dollar for now. Okay? Then onto the euro. It's bounced around, it hasn't done too much. It did not even test the resistance and trade lower. So take all that away. It's all sitting and consolidate. It hasn't done, most of it hasn't done too much. You can see that again. Why I'm not super enjoying this today too much is that it's all sitting in consolidation. We've seen a small break and retrace, sitting in that relative consolidation, consolidating, right? When you get down to that, it's really in that consolidation. That spike was because of the news. Now pushing back down a bit. Euro as well, it's just in that level. So again, not super excited about these. Okay, I would say I would maintain that. I'll maintain the view on the euro. Take these away. It's going to consolidate. What I would look for is a test and reject back down. I'll still look for the same thing, which would mean that I'll be looking to sell down at 1.0650, stop loss 30, take profits almost 60, 55 to the downside. Could even go 115. I don't see why it will move 115 today. So I would say just 60 to the downside here. 1.0650. So I would sell this 1.0650, stop loss 30, take profit 90 to the downside. All right. If we see the dollar break strongly to the downside, I would just be sitting out. I wouldn't be buying it up. I'll be looking for places to sell. You know, keeping in mind that significant downtrend on the pound, on the euro, on the Aussie, on the Kiwi. We're seeing big moves to the downside. So a retracement to me is not an opportunity to buy. A retracement to me would be looking for a good place to reject and sell it back down. Okay, then onto the Swiss. Take that away. I think it's going to come back in and trade within this range. Again, ranging. It's likely to range between 9110 or 91 and 9150. I don't see a move there. Looks like it's going to be a short and sharp session today, guys. Okay, so US Swiss franc likely to range between 0.91 and 0.9150. No major breakouts expected there because the dollar is ranging, so Swissy likely to range. USCAD, we did well on that with the news last night. Now, if you look at this, it is still strongly to the upside. What's likely to happen here? We want to see it push up, test that resistance, and look for the reaction there. Looking at H4 time frame, typically you would say that if it test that breaks through that resistance, we'll look to buy it up. But if I just stretch that right across, you see that this area, we've seen major rejections since October 22. Right, October 22, we've seen it again in March 23, we've seen it again in November 23. We're approaching that level again right now. So even if it does push up towards that resistance, I might be looking for a good selling opportunity back down on the USCAD. Then you'll be looking at 1.3880, stop loss 30 pips, take profit, good 100 to the downside. This, if it rejects strongly, could come all the way back down like what we've seen over the last couple of years. Okay, so a lot of patience required here for the US CAD because we want to see a reaction at 1.38, well, 1.939. We're going to see a reaction at 1.39. Then we look to sell at 1.3880, 30 to 100. 1.3880, stop loss 30, take profit 100. Jamil, yes, the Tickmill webinar is on today. Again, the link is there and it's at 8 p.m. GMT plus 8. Please, if you register for it, it'll send you an email, I think 1 hour or half an hour before the session, just to remind you to turn up. Okay, so just go register for that. Also saying, okay, that's done. Then on to gold. We're deliberating between how far can it go. Right after our session, it shot down during the session. Right after that, sat there, right, sat right there and then pushed up again. Looked like, I didn't get into this move up, but as it got up, I started thinking, would it push all the way up? Didn't, it stayed at that range. Right, it came back and then it's sitting there right now. Looking at this, we don't need that. So it came up to that 61.8 level and turned back down. Yes, Jamil, you're right. 2000 is Singapore time. It's right in the middle of these two levels. See this. $50 right there. So it's between that swing high and this level. It's right in the middle. The good thing is it stayed out of this bullish channel to the upside. I'm actually looking at this. We can take away some of these lines. It's just getting a bit annoying. Take those away. That channel is, I'll keep that there as a bit of a reference point. It looks like we might see it come back down a bit. Now, maybe what we're looking for is possibly another retest and then a push back down. Not going to be looking not going to be too keen to sell it down, but what I'm going to be looking for here is gold, for gold to retest and reject 2400 down to 2360. 2360. Okay. It's just going to sit there. Maybe push up a bit or sit there and push lower. If it doesn't push up, then if it breaks 23.60, we could see it come down towards 23.30. But as I was saying, not too keen on selling gold at the current price level. Maybe if it breaks 2300, then I'll go for the big, more significant move to the downside. But for now, I would still say that it's in a little bit of an indecision level. Okay, as promised, a quick, short and sharp session covered the majors and gold. Any questions? Again, I will remind you that you should sign up for this session. I look forward to seeing you all on the Discord channel and also on the webinar at 8 o'clock later today. So not much to add, not super exciting here on the charts. So, you know, good thing to do when you're not trading too much is to learn new skills. So I'll see you all later on the Tickmill webinar. Take care now, trade safe or not trade at all, and bye-bye.